Hey everybody, welcome back from Memorial Day weekend. Let's take a look at how we're going to start the day, what the heck is the date anyway, May 28th, 2019. Here is a little quick shot of the ES. Um, ES traded up to about 28.42 on Friday and down to 28.20 at its low. The high was right out of the gate at the open and flushed down early in the session. Over Memorial Day, we traded up to a high, not quite as high as Friday, and a low, not quite as low as Friday. So an inside day to Friday's action. Halfway back of Friday's um, range was 28.31.50. So if we open above that halfway back point, maybe even giving it a little cushion, opening above, say 28.32 or so, that's going to be possibly a bullish start to the day. Maybe we'll push on up here to retest the high, maybe even test Friday's high. Or if we open below the halfway back on the day, um, uh, Friday's halfway back, then we're going to at least come down and maybe test the overnight low, if not Friday's session low altogether. One of the things that's more, now switching over to a review of the S&P 500, the reason why testing Friday's high from ES would be important coming out of the gate is because you can see on Friday for S&P 500, this pushed into an overhead gap. So we had made a higher high over Thursday, which had been overhead gap resistance to this huge gap up to Wednesday's close. But our high, even though it pushed into this gap, it failed and found supply sellers right at the 10-day simple moving average. This is a sinking line, so it's going to be even lower when we open today. So when we open today, if we can't even come close to taking out Friday's high, find sellers and start pushing down, you can bet that it's because of the 10-day simple moving average. So we need to look at a daily chart off of the open, note where this has sunk to, and then watch to see if price can take it out and move above it. And if it can, we're probably going to fill this gap in. And if it can't, then we're probably going to come on down and test the lows that we saw on Friday. Friday's low was a huge hold around this 28.20 level. This is where we found some buyers coming off of the May low, the one that was set the week before that pushed us all the way down to 28.01. So if we find buyers again in here around the 28.20 area and reverse, then we probably have a good shot of coming on back and taking out that 10-day simple moving average, moving into this gap and filling it. And then after we fill this gap, then we have a whole new set of hurdles up above us with a 20 and a 50-day simple moving average that are about to come into a bear cross. So we've been going through these every few days, some sort of a bullish or bearish cross of the simple moving averages. We tried to trade through get a bullish buy program going off of this 100, 200-day simple moving average cross. It did produce this, a couple of days bounce here, but unfortunately, there's too much uncertainty, too much negativity in the market right now between trade, between what's going on with Iran and troops being sent over to the Middle East. So there's a little too much uncertainty going on in the market right now to warrant really ripping here and making that rally come out. But I do think that this bullish cross is probably the reason that we haven't been breaking down below 2,800. So let's see if that continues on, or if this is the week that we get the break of 2,800, or if this is the week that we break on back through the 20 and the 50-day simple moving average and move on to 2,900. I'm really not voting for that. I really don't, like I just said, I think there's too much negativity in the market. But just know that in order to foil this bearish cross, we have to trade above it, hold above it, and close above it. And in order to do that, we would have to trade up to at least about 28.80 and hold. So looking at our backed out simplified daily chart, you can see what would happen if we were to break down finally below 2,800. We would come down and fill this little unfilled gap here back to what was happening here on the 11th of March, and test our 100 and our 200-day simple moving average. And if we were to pass right on through and fill that gap, then maybe we would go ahead and fulfill our measured move target down to 27.63 to 64. As a reminder, this was taking the all-time high to the break of the 50-day simple moving average and doubling that move down. That also is a nice play of the 80 handle rule, because if we were to break 2,800, we would expect to trade down to the 27.80s. If we break the 27.80s, we would expect to trade to the 27.60s. And of course, if this is not low enough, then once again, the 80 handle rule comes in. If we were to break the 2760s, we'd trade down to the 2750s, and that would be a hold above this gap that was made here at the end of March after we had this little mini sell-off at the end of March, recovered off of it, and then came in the next session and gapped up open. I think we would trade down here and we would hold above this gap, because if we don't hold above this gap, I don't think that there's enough to stop us from just pressing all the way down and testing the low of that sell-off that was at the end of May. And that would take us all the way down to 2720 to 2725. Okay, so hopefully this gives you a refresher of where we're at and the levels we face as we get into this final trading week of May 2019. Have a great rest of your day. As always, good luck and good trading.